So next, what are the relationship between interest rate and economic progress? This is the most vital thing. What are the relationship between interest rate and the economic progress? The high interest rate, basically borrowing becomes the costly. Business cut the investment. When the interest rate will high, then all business magnates basically try to cut the investments, slows economic growth. If the interest rate just stays a low, that is the borrowing is cheaper, boost up the investment and the consumption, promotes the growth, but too low may cause the inflation. So nothing is beneficial for our economy. Neither higher is required or lower is good. If we just state a case study between the Reserve Bank of India and the COVID-19 scenario in the era of 2020-21, basically at that time RBI reduced the repo rate to 4%. Why RBI took this type of actions? Basically RBI tried to encourage the borrowing and the support to the economy, our nation. What are the results? The results, basically EMIs went down, but as a result the fixed deposit returns also fall down. What we taught at that situation? The interest rate is a balancing tool between the growth and the inflation. Next, the most important thing is what is the administered and what is the market determined rate and the recent changes. The administered interest rate, basically that is fixed by the government or the central bank, that is Reserve Bank of India. The interest on the small savings schemes, EPF, Employees Provident Fund. The advantages of setting this type of interest rate, basically to stabilize the economic condition. Disadvantage, this is not flexible, this is static. And market determined rate, basically set by the demand and supply. This is a practical scenario. Corporate bonds, call money market, these are the examples of market demand rates. What are the advantages? Basically market demand rates reflects the true market conditions. This rate reflects the true market conditions. And what are the disadvantages? These rates can be volatile because this is market rate. This rate always depending on the demand and the supply of the market. So this is the most important thing, that is administered rate and market determined rates. And what are the recent changes? This is very important for our general knowledge. What are the recent changes in India of interest rate structure? Move from the administered to the market linked rates, repo rate linked lending the rates, that is the EBLR introduced first time. Quarterly revision of the small savings rate, raise of the floating interest rate for the home loans, now linked up with the repo rates, better transmission of Reserve Bank policies to the bank. So these are basically the recent important changes in India. So if we just try to summarize our today's up to this lecture, that is the interest rate means the interest rate is the price of money. Next, there are many types of interest: gross interest, net interest, real interest, nominal interest, differential interest. Next, what are the causes of variation of the interest rates? Key interest rate varies due to inflation, due to demand and supply, due to risk, due to the maturity period, due to the liquidity of the market, due to the monetary policy of our nation. Next, interest rate and the economic growth are deeply connected. This is deeply connected. And India has shifted from administered rate to more market driven rates in recent years. So this is most important thing of interest rates and its structure in India.